So I see we've already had a few folks join us here already. So bear tight with us for just a minute. We're going to give folks another minute or so, see if we have anyone else tag along. But those who have joined so far, thank you so much for doing so. We'll get kicked off in just a minute here with our Mo Money Mohawk team. And thank you very much for joining us again today. And we'll get started in just a minute. Thank you so much for joining so far.
Okay, I think we can get started now.
Okay. Yeah, so let's begin. Good day, everyone, and thanks for joining us for today's session. My name is Alexandra, and I'm the Money Counselor at the Mo Money Financial Resource Center. The Mo Money Financial Literacy Resource Center and the Mohawk College Alumni Association, in partnership with the Canadian Foundation of Economic Education and the National Bank of Canada, have created a series of Mohawk College student-facilitated financial literacy webinars titled Wealthy Wednesdays. Welcome to the fifth webinar of the series, Borrow for the Books and Managing Your OSAP Loans. This session is delivered from my home in Hamilton, Ontario, on a land very close to Mohawk College. So I'd like to take this opportunity to acknowledge that my home and the college are situated on the traditional and unceded territory of the Haudenosaunee and Anishinaabe nations within the lands protected by the Dish with One Spoon, One Spoon Agreement, and is currently home to many Indigenous peoples from across Turtle Island. Mo Money is here to help. At Mo Money, we are committed to helping students improve their money skills. To accomplish this goal, we host events, workshops like this one, and we also offer individual appointments where you can meet with me and talk about your specific financial situation. We have also developed some financial resources to support students in their path to develop financial literacy skills. One of those resources is the Money Matters module. This is a free course on my Canvas. In that module, you can learn everything about budgeting, managing debt, starting a business, big purchases like cars and houses, and much more. We have many different ways that you can get involved with more money. These are some of them. You can follow us on social media. We are on Instagram and Facebook. You can complete the Money Matters module on my Canvas. And you can just check our website to learn more about the different events and workshops that we are constantly offering. What are the benefits of attending our workshops? So first of all is the co-curricular record. So the CCR is a tool for students to track this experience or any program or event not formally related to a program of study. The CCR can be used on and off campus when applying for jobs, awards, and scholarships, and to build resumes. Just like an academic transcript, the CCR is verified and approved by Mohawk College staff. The CCR is then stamped and signed by the Vice President, Students International Alumni to acknowledge a student's non-academic contribution to their campus and community. You can download the CCR and attach it to an application to draw attention to demonstrated skills and experiences. So please don't forget to register your attendance and enter the code MOMONEY for me. We will leave you the link to register in the chat. The second benefit is the chances to win some prizes. CIFI has been very generous in offering a chance for participating students to be entered into a draw to win 100 gift card from Tim Hortons. Also, if you attend 4 out of 5 of the webinars, your name will be entered into a draw to win $250 cash. If you attend 4 out of 5 of the webinars, you will be eligible for a financial advocacy badge. Now I'm going to pass it over to Lindsay from the Mohawk College Alumni Association, who is going to share with you some important information about the association.
Awesome. Thank you so much. Hello, everyone. My name is Lindsay Diamond, pronouns she and her. I work in the Alumni Relations Office as the Career Transition and Development Coordinator. The Alumni Association is your link to the Mohawk community after you graduate. You can connect with alumni on all of our social media platforms, as you can see on your screen. As a student or a graduate of Mohawk College, you are welcome to participate in all of our events. We host a large range of events, such as social events like trivia nights and tea tasting, career development workshops and webinars, personal development webinars, and many more. For example, we're bringing back our annual 9 and Dine golf tournament, which will be hosted on June 3rd. For all the details on all of our events, follow us online on our social media platforms or check out our website. On to our feature presentation. I'd like to pass it over to our alumni facilitator, Kyle Datsku, and the CFE staff for the borrowing for the books and managing your OSAP loans. Enjoy. Over to you, Kyle.
All right. Thank you very much, Lindsay. I appreciate it. And like I mentioned earlier, thank you everybody for joining us today. It looks like we're going to have an intimate session with the 5 of us, and I'm excited for that. I hope, because we just have the 5 of us here, that what we can do is we can make sure that this is a space or a presentation where you can feel free to ask any questions, and anything that comes to your mind that you would like to discuss, please bring up. And I think we're going to have a real chance to really get in depth on some of the things here. So I think that's quite exciting, actually. Like Lindsay mentioned, my name is Kyle Datsky. I graduated from Mohawk College in 2016 as part of the general business program. Since then, I've launched my career into the world of business, more specifically in the car industry, the automotive industry. So I spent a couple of years with Bud's BMW in Hamilton as a sales representative. And then I moved on to Mercedes-Benz in St. Catharines. And now at Mercedes-Benz, I've been promoted from sales to financial services manager. So this is something that I work with all the time, something I'm very familiar with. And as I've been a student fairly recently, I know some of the challenges that we all face and you know, financially and the thing with financial challenges is they can snowball into the rest of the aspects of our life. So I'm excited that we'll be able to touch on that today. So as I move on over here, I'm going to share my screen and start our presentation. So now over here, everybody should be able to see my screen. We're doing all right over there? Everybody see me okay? Got the presentation on there?
Yes, looks good.
Fantastic. Okay. So what we're going to be chatting about today is borrowing for the books. So we're looking to discuss the Canadian Foundation for Economic Education is working with the National Bank of Canada to provide a series of workshops to help post-secondary students across the country get a better handle on their money. So today's topic, we're going to cover some very important information you'll be able to take action right away on to be able to get better control of your money. This workshop's going to be about an hour, and then we'll have a live Q&A at the end of the presentation. But if any questions come up during, please stop me and let me know. And then I seem to have lost my chat here. So Lindsay, if you don't mind just chiming in if we have any questions come up in the chat there and cut me off, and then I'll be able to hop in on those. Also in the chat, you're going to see we sent a pre-survey that we hope you completed. There will be a post-survey sent as well at the end of the session. If you fill out both, you'll be entered into a draw for one of two $100 Tim Hortons gift cards. $100 goes a long way, Tim. So please make sure that you do so to be able to enter into that contest. And don't worry, we're not going to use your email for anything other than that draw. Okay, so there won't be any promotional emails or anything else coming along with that. But please make sure you enter so that we can get you into that draw. Okay. So what we're after today and what we're looking to accomplish is the CFEE and the National Bank are looking to increase our access for students to financial literacy. So the program Help Managing Your Money on Campus is designed to help support students like ourselves, providing you with comprehensive financial education modules. This is so important and timely because more than ever, we live in a complex financial world. The majority of you, I know myself for sure, have likely already experienced the world of financial costs, responsibilities, planning, spending, debt, credit cards, and much more. And that's exactly why we're partnered with universities and colleges across the country to help equip students with the information they need to take on all of life's financial challenges. So in the first half of 2020, we asked students about their priorities and what they want to learn more about. Nearly 1,500 students answered our survey from 94 different post-secondary institutions. This is what we found out. So 53% of students said one of their top challenges was paying for school. So over half. 64% of respondents want to learn how to deal with financial stress, and 55% of respondents want to build a financially healthy life. So I know if I had taken part in that survey, I would have qualified for all three of those answers, and making sure that how the challenges of paying for school, dealing with financial stress, and ensuring that I build a financial healthy life moving forward. So what are we going to talk about today? Today, we're going to talk about three major topics. So first, we're going to discuss how to pay for your education. There are many ways to accomplish this, and I'm sure the students here would already know that, and you're already enrolled in post-secondary, so it's something that you've already had to experience. So while I'm talking about this kind of in the future tense, I understand that it may be in the past tense for some of you. But what I want to make sure that we manage is that this is also things that you can look at moving forward in continuing your education and everything like that. So we want to look at, how can you accomplish that with free money from the government, businesses, and other ways to support you. Next, we'll look at how to manage your debt. Not all debt is bad, and we will explain good and bad debt. Also, we always want to make sure that you understand all the terms of any sort of debt and borrowing that you do before you sign on that dotted line. And finally, we want to talk to you about using credit cards. These can be great tools to use, but you must understand how punitive it can be if you don't pay off your balance. And also, we want to discuss what impacts your credit score and how you can improve your credit score. So with what we're after in mind today, the learning objectives that we're hoping to accomplish as you leave today's workshop, and I'm sure that you will, is having a better understanding of various programs available to you to help pay for your education, including how to pay off student loan debt, why it's important to make sure you're paying off your credit cards with more than just a monthly payment. I would like to say paying them off in full, but I think we need to be realistic in terms of the financial challenges that some of us are facing, and it's a difficult world to navigate right now. So I'm realistic of that. I want to make sure we manage those expectations throughout the presentation today, and how we can improve your credit score and manage your debt as to reduce your financial stress and not feel so much pressure on yourself. So first topic we're going to look at is paying for post-secondary education. Now, like I said, I know you're already probably in post-secondary. That's why you're in the seminar today. But I want you to look at this through a lens of moving forward, how we may be able to pay for your post-secondary, and if you're to continue your education, what that may look like as well. So the first thing when we're looking at when we're going to cover paying for school, what we're going to cover in this section are the costs, payment options, and how you can make a plan for all of that. So I'm sure I don't need to discuss with the group here how expensive post-secondary education is, but here's some interesting info from Unclaimed magazine. To determine the real price of an education in Canada, Unclaimed undertook a first ever survey of over 23,000 undergraduate students to find out how they spend their money and how they save for an education. They found the average cost of a year of post-secondary education in Canada is over $19,000. But for some students, the amount is significantly higher. As an example, a University of Toronto student living off campus can expect to spend over $23,000 a year, the highest that we found in the survey. The second on the list being Ryerson at just over $23,000. And then meanwhile, there were students living at home attending Sherbrooke that had lower costs for an education at about $4,000. So when we're looking at going to school in Hamilton and going to Mohawk, I think it's very, very reasonable to compare to some of those middle of the pack, higher end numbers, in the sense that the cost of living in Hamilton is increasing substantially and is growing exponentially year over year. And it's important that we manage that and look at our cost of living as a total spectrum and everything that's included in that. And when I say that, rent in Hamilton, what's that look like? Fuel prices if you're commuting to the college. These are all things that we need to consider when we look at the overall statistics of going to school. So with all this in mind, according to Stats Canada, the average Canadian university student, so a little bit different for us in Mohawk, and I understand that, but some of us are going to go on to university afterwards, myself included. The average Canadian university graduate finishes with more than $26,000 in student debt. That's a tough one, but that's par for the course. And with that being the average, if that's something that you're dealing with, make sure that you're not alone. So when we look at this and we look at different payment options, there's a lot of different ways that you can pay for school. These include scholarships and grants, government student financial aid, a registered education savings plan, savings from a tax-free savings account, provincial loan programs such as the Ontario Student Assistance Program, better known as OSAP, summer savings, and student lines of credit. It's important to understand how they all work so they can determine the best way to be able to pay for your studies. Now, the best way, and I think we can all agree on this, the best way to be able to pay for school is through free money, okay? So most universities and colleges, Mohawk absolutely, have bursaries and scholarships based on high school marks. However, there are many different programs available to you at Mohawk that aren't necessarily based on high school marks and are based on other different criteria that may allow you to receive the different funds that are available to you. Now, what's the difference between a scholarship and a bursary? A scholarship is awarded for academic achievements or involvement in athletics or volunteering, things like that, while a bursary is based on financial need and is not necessarily tied to your marks or other factors that may be involved. We will provide you a resource. I believe you may have already received it, but you'll absolutely receive it afterwards if not. That will point you in the right direction to find the scholarships and bursaries that may be right for you, because there's different things available for different programs and a lid for every pot, if you will. So the big thing that I wanted to touch on here, I've got the University of Ottawa screen here, but I wanted to take you to a different screen on Scholarships Canada. Let me pull that up for us here. Give me just a minute. I'm going to share my second screen here. Oh, sorry, just a sec. My Zoom minimized on me there. Screen share. So this is a screen that I wanted to show you guys here. So this is a website, Scholarships Canada, that shows all the different scholarships that may be available to you based on the school that you're in, and what other things may be available to you based on the program or everything else that may be available. So this is included in your resource website. Please take a look at this and see what may be available to you based on your program or what may be specific to you. And you'd be potentially surprised to see what may be out there and could suit specifically what you're looking for. The big thing I want to discuss at Mohawk specifically is how many scholarships and bursaries go unclaimed. When I was at Mohawk, I was involved with the Mohawk Student Association. And one of the biggest challenges that we faced when working with the scholarship department is that there was so many bursaries that went unclaimed because someone that qualified didn't apply. So it's always worth filling out your needs assessment profile. And you may be surprised to see if you end up with an email that says you've qualified for a bursary. So please take a look at that, and we'll ensure that you have that link as well to be able to do so. And then we have different, you'll receive these links as well to be able to take a look, because there's banks, companies, foundations, and other enterprises that also offer scholarships, bursaries, and grants. So there's a lot of different things that we can look at here as well. And we'll make sure once again that you have these links to be able to take a look at these along with the Scholarships Canada website to see what might be the best fit for you. Now, as we talk about government student financial aid, this is something that, you know, when we're looking at, okay, we've got the free money, what are the other options? And the other options are that you'd be able to borrow as well. So that's something that is something to consider too. So for government student financial aid, you have to apply 6 months before the program starts, and interest rates are typically lower than any other student debt, like a line of credit or any other options that may be available. You do not need to pay back the loan or interest while you're studying, and that's probably, in my opinion, the biggest advantage that this has. Once you've completed your studies, you don't have to start paying back the loans immediately. If you have a Canada student loan, you will have a 6-month non-repayment period after you graduate. During that period, you won't have to make payments and you won't be charged interest on your loan. The 6-month non-repayment period starts after you do one of the following: finish your school term, transfer from full-time to part-time studies, leave school, or take time off school. So I know that these last 2 years have been somewhat tough to navigate with how school has been. So if you've borrowed financially with government student aid programs, make sure that you're careful and cognizant of the status of your OSAP and these different types of things so that you can ensure that you manage it accordingly and know what you're doing. So as we move on to the next slide here, you have to apply to your provincial student aid offices. We'll provide this link to you as well, so you're able to take a look. Both part-time and full-time students can apply, and the grant and loan amount depends on your province, family income, dependents you may have that are under the age of 18, tuition and living fees, and if you have a disability, you can apply at the Government of Canada website as well. Now, there have been changes to the Canada Student Grants and Loans that were introduced so students facing financial challenges from COVID-19 can access and afford post-secondary education as well. So how this looked is they doubled the Canada Student Grant amounts in response to the increased need for the incoming 2020 to 2021 school year and beyond. So the maximum amount of Canada Student Grants will be doubled effective August 1st, 2020. So we're already into that, and are available until July 2023. So it'll be really nice over the next year or so. Please take advantage of these grants that are available to you. These grants were increased to a maximum of $6,000 or up to $10,000 for those with a disability. And the grant for part-time students compared to full-time students was increased to $3,600. So this and the amount for those with dependents was also doubled as well. Now, another way in which you can pay for school is through registered education savings plans. These are created for you by a parent or a guardian of the student. Now, keep in mind, I understand that in the situation here that ship may have sailed. Okay, so that may be something that wasn't created or not something that you had going into school, and I'm understanding and cognizant of that. However, hang tight. There's something really important here that I want to make sure we touch on that could be one of the more important takeaways of this presentation if you're able to take advantage of it and you qualify. So in order to open an account, just to give you an understanding of how these work, so we understand for the future, the student must have a social insurance number and a Canadian citizenship. You must start to save an RESP for your child before the end of the calendar year in which the beneficiary attains 15 years of age to be able to qualify for the education savings grant. When you contribute this way, the federal government will provide a grant up to $500 or 20% of the first $2,500 contributed. Unused grants can be carried forward for years dating back to 1998 if the child was born at the rate of 1% per year, up to a total of $1,000 in grants per year. Now, the important part is that students can get up to $7,200 in free money depending on their family income. So lower income families can receive even more from the Canada Learning Bond. So that's up to an additional $2,000 of free money per child if the family net income is less than $48,000. And an additional grant of up to 20% on the first $500 contributed annually for the same income level. Now, this is the really important part. Beginning January 1st, 2022, so just this past January, students born in 2004 or later can apply for the Canada Learning Bond using their own SIN. Didn't have to be created for them by a parent. This might make them eligible for up to $2,000 immediately by opening an RSP account, but without having to deposit any money into the account. So if you may qualify for this, please look into this, as this is a new initiative by the Canadian government, and one that I hope to see students take advantage of over the next few years. Next, I want to talk about a tax-free savings account. A tax-free savings account is an absolute excellent tool to be able to save your money that we have available to us here in Ontario. And why it's so fantastic is that any money that grows within the account grows tax-free. How that works is that you don't have to pay any taxes on any money that's made within this account. So where I think that this is a really advantageous way to be able to save for school is if on the next slide, when we talk about summer savings, this is an excellent place to be able to store your summer savings because you can take an out of sight, out of mind approach to your money. So for each amount that of pay that you get, you can take the opportunity to pay yourself first, if you will, and take that money off of each paycheck and put it right away into your tax-free savings account. Let it grow without paying any tax on the interest that you make. And then you can ensure that you have the money ready for you in the fall. So like I mentioned on that next slide there, we're going to talk about the summer savings. So I think the best way to be able to do this, I know we mentioned here a basic savings account. In my opinion, the best way to do so is to use the tax-free savings account, like we just talked about. And I'm happy to answer any questions on that as well. Now, during your time off of school, you can of course work part-time or full-time, and a basic savings account is great for those short-term savings. And you can access your funds at any time with no maximum amount. And some banking apps, I would say most, if not all, you can set up saving goals as well. So this can help you save X amount in that period of time based on the money that you have coming and going and your monthly expenses and everything that goes along with that. Another beneficial way to be able to pay for school that is sometimes better or more effective than OSAP, depending on your situation, is a student line of credit. So during school, using a student line of credit, you do not need to repay while you're a full-time student. You just need to repay the interest each month, and you can reuse the credit at any time. I like this because it allows you to have a little bit more cash flow than potentially your OSAP will, because it's not in a lump sum. It's a rotating, or what we would call revolving line of credit. So it's open, okay, and you can kind of take money from it as you need it, which for some people in the way that they like to budget can be more beneficial than the lump sum payment that OSAP offers. Now, you must repay this after you have a full-time job or 1 year after your studies. And remember that interest is still accumulating if you delay paying this back. The time you have to pay back the line of credit is based on how much you owe. So that'll be circumstantial based on what you've worked with and everything like that. So it's very important with the student line of credit in comparison to OSAP as well, but especially with the student line of credit, you make sure you understand how the agreement works. You may be given that lump sum, right? And then possibly be able to use a line of credit if the bank allows it, but you want to make sure that you're budgeting accordingly and you're taking the time to look at your monthly expenses, look at how much money you have coming and going, and ensuring that you're managing everything accordingly. So as I discussed, this now becomes a budgeting exercise, okay? So you need to figure out all of your costs and expenses for school. What are my variable costs? When I say variable costs, what are my expenses that may fluctuate month over month? So do I maybe spend more on 1 month on food than I will the next month? And what's a fixed cost? Is my car payment fixed? Do I have a car payment? How much is that monthly? That's going to be a cost that doesn't change month over month. How much is my rent? That's another example of a fixed cost that won't change month over month. Once you've looked at your cash flow and your budget for the month, you can take a look at, are there any places where I can save money? So could I maybe get a roommate? Could I do a car share program instead of having this one car to myself? Do I live close enough to the college and maybe I can use public transportation instead? And then once I've taken a look at all my inflow and my income and everything coming and going, what's available from all the other scholarships and bursaries that we mentioned earlier? And then when all is said and done, what's my bottom line? Do I have an excess in money? Okay, great. Now I can put that aside and I can start to think about when I'm going to start to need to repay my student loan later down the road. And if I'm short money, how short am I monthly? And what can I do to be able to figure out with that, come up with that difference to make sure that I've got enough money month over month. So we're going to pass it over to Craig. Craig's going to set up a Zoom poll for us. I'm curious to see what the answers that we have here. Now, what I want to know is how will you, or how have you, because I know sometimes that we've, like I said, we're already into school. So how in the past have you, or how do you plan on moving forward, saving money to pay for your tuition? The different options that we have there are bank scholarships, government student financial aid, RESPs, TFSAs, OSAP, summer savings, student line of credit. So if you guys, everyone be there, could just take a minute and vote in the Zoom poll there. I'm very curious to see what our results will be.
Okay, we'll just give it another 15, 20 seconds here, Kyle, to see, let a few more
Yes,
people
please.
answer.
How do we do, Craig? Do we get some answers back there?
Yeah, can you see the
I
results,
can,
Kyle?
perfect.
Okay.
Interesting. Okay, so we got some responses for bank scholarships, government student financial aid, OSAP, summer savings. This is what I assumed I would see. You know, the RESP and the TFSA, these hopefully are tools that you can now know about and can hopefully use moving forward. And the tools that you're currently using are fantastic tools. So I'm glad to see that we're taking advantage of those, and that's fantastic. So the key takeaways that I want us to be able to have from this is that post-secondary school is expensive but valuable. I need you to think of post-secondary school and borrowing for it not as just a debt, but as an investment in yourself. And it's an investment in yourself that you are always going to receive a return on that investment of. It's very, very important to be able to view the spending that you're doing on school as an investment. There are many ways to pay for school, a lot of which we went over. And of course, we just had our Zoom poll there to kind of see how we're doing so far. And number 3, make a plan. Okay, you cannot manage what you can't measure. And it's very important that you're budgeting and looking at the money coming and going to ensure that you have everything managed and set up accordingly. So the second topic we're going to be discussing today is how to manage your debt. I'm sure this is a subject that is near and dear to many people's hearts, myself included. And when we talk about debt, I want to kind of use an example from Mercedes here. We have a lot of clients at Mercedes here that you would deem wealthy or very well-to-do, and they even carry debt. Debt is a very normal thing. It's a part of the economy and part of the society that we live in and work in. So let's kind of, as we move into this, kind of remove some of that stigma around debt and figure out how we can best manage it. Because almost all students are going to have to borrow money for school, and that's okay. And they took the words right from my mouth, because if you have a student loan, you're not alone. 73% of Mohawk students rely on OSAP. Okay, so I saw in our Zoom poll there, that was a very common way in which we would pay for school. And that is absolutely the case amongst all your Mohawk peers as well. According to Stats Canada, 82% of college graduates had loans from government sources. So even higher than the numbers that we see at Mohawk. And the 2018 National Graduate Survey collected information on individuals who graduated from a public post-secondary institution in Canada in 2015. So I'm sure these numbers have only increased since then. Of all 2015 post-secondary graduates who graduated with student loans, 2/3 of them had not fully repaid it by 2018. So in that same survey, the average debt at graduation was $15,000. So understand that paying for your school and managing the loans that you may have borrowed to do so is a marathon and not a sprint. You're not going to be expected to pay these back overnight, but it's important, like we talked about here, in managing it, ensuring that you have a plan to pay it back, but it's not going to happen right away, and that's okay. So as we talked about OSAP, if you're like most graduates, you are graduating with a student loan. So you're familiar with the National Student Loan Service Center. It's important, very important, to keep your account with them up to date, okay? You will be required to start repaying your loans 7 months after completing full-time studies. At this time, this is when your loans are also going to start to collect interest. Very important to note, students with an OSAP loan who are enrolled in a program or who are continuing full-time studies with a new OSAP loan will automatically maintain interest-free status. However, it's very important, like I said, you're managing your National Student Loan Service Center account so that you can see this and make sure that you're on top of if you're starting to accumulate interest in this. Now, if you have the means and the opportunity, you can start paying off your loan at any time. You do not have to wait. A personal recommendation I may have here is, while you're in that 6-month window or 7-month window of not having to pay back your loans yet, this may be a fantastic opportunity to save that money that you're making in a tax-free savings account, so that money can make a little bit of money. And then when it comes time to pay back your OSAP loans, you're able to put some of that money towards that to get started off on the right foot right away. And another example would be, maybe if you receive some graduation gifts in the form of money or anything like that, that may be an excellent opportunity to put your right foot forward in paying off your OSAP and managing it as soon as graduating. So when you look at your repayment options, there's a couple different ways in which you can manage repaying that loan. Now, they're going to reach out to you by email before your 6-month non-repayment period ends to prompt you to be able to set up your loan payment options. So it's great that you have loan repayment options, as everyone's circumstances are different. Some people find work right away after graduating, and some people don't. Some people have different family obligations and other financial circumstances they need to be able to maintain. So it's different that you have, it's important you have options available to you, and you do. So as we mentioned earlier, if you have the means, at any time, you can put a lump sum down on your loan. An OSAP loan is known as what's an open loan. So you can set your monthly payments, and you have those monthly payments going towards that, but you can put extra money down against it at any time. This won't change your monthly payment, but it'll shorten the term or the length in which you repay back that loan and make it easier as well. It's very important that you manage your cash flow when you're doing this. When I say managing your cash flow, you're looking at how much money is coming in monthly, how much money is already going out monthly, and how much money can I afford to be able to allocate to my student loan payment. So at this time, you'll be able to choose a monthly date for your loan payment. You can choose the day as well that you'll have that removed from your account, which is nice. Most people like to choose a date where they know they will either be getting paid or have sufficient funds in their account. It's very common here in the car visits, for example. People will want to set their payment, their car payment to come out on the day that they're paid, because then they can be able to manage that. They know the money's come in, and they're able to manage accordingly. So most people opt for the automatic deduction. They opt for that monthly payment and to be able to manage it. This is the easiest way to ensure you don't miss a payment, but you need to ensure, if you're going to go this route, that you have the monthly amount in your account, so you're not put in a situation where there are insufficient funds in your account when OSAP goes to withdraw. You can even arrange to have the payments calculated on a weekly or bi-weekly amount. This helps you pay down the principal amount of the loan quicker, so that you pay less interest overall. When you look at a bi-weekly payment, it's very important to remember that a bi-weekly payment, even though the amount is the monthly payment divided by half or so, you're actually going to pay off much sooner using a bi-weekly payment, because a bi-weekly payment has 26 payments in a year, where there's only 12 monthly payments in a year. So there's not 24 bi-weekly payments in a year, it's 26, based on there being 52 weeks in the year. So it's important to remember that it's not, when you go bi-weekly, it's not just a half of a monthly payment, you're actually making more payments that way. So, and most of the time we're paid bi-weekly. So it's a great way to be able to manage that loan moving forward. Now you can also choose whether to have a fixed interest rate or a floating interest rate. The Student Loan Center will default by giving you the floating interest rate if you do not specify which one you want. Like I said, this is why it's very important to manage your account, be on top of it, and know which one that you prefer works better for you. Just because they give you the floating interest rate by default, that does not mean that's the best option for you. A fixed interest rate is calculated to be the prime rate, which is set by the Bank of Canada, plus 2%, okay? Now, as of March 8th, the prime rate was 2.7%. The Bank of Canada recently, just last week, has notified that they're going to increase the fixed rates or their prime rate. And I predict that over the next little while that's going to continue to increase. So the benefits of a fixed rate is that it's stable and predictable. A floating interest rate is equal to the prime rate, so whatever the prime rate ends up being. The prime rate is subject to change by the Bank of Canada, like we've seen so far twice in 2022. A floating rate is risky for this reason, because it can be subject to the economy and factors that are beyond our control. Now, you can start with the floating rate and change it to the fixed rate at any time. However, once you change it to fixed, you cannot change it back. So there are benefits to the floating rate, and I consider, make sure you look at what's best for you. My personal recommendation, just based on how things are shaping up economically, that the fixed rate may be the better route to go at the moment. But like I said, it depends on your personal circumstances, and that's not always the case, but that would be my personal recommendation at this time. Now, based on what's happened and what we've seen over the last few years with COVID-19, the government of Canada has eliminated interest on Canada student loans until March 31st, 2023. This all is covered on your account with the Student Loan Center. So again, please visit that website. Make sure you're on top of it. If you're using OSAP, it's very important to know that you're managing all of that and seeing what resources are available to you. Now, when we're looking to pay off your OSAP loan fast, like I said, it's a marathon, not a sprint, and we understand that. However, the sooner you can pay it off, the better, because the less of an implicit finance charge or the amount of interest you have paid will be, okay? So important to remember when we're looking at paying off your OSAP fast, you can always increase or decrease your monthly payments to suit your budget. Decreasing your payment will increase the amount of time it takes to pay off your loan, of course. And if you miss your loan payment for more than 9 months, your loan falls into default and is transferred to the Canada Revenue Agency. If this happens, we need to avoid this at all costs, because if this happens, you're at risk of racking up heavy penalties and it will affect your credit score. CRA also has the power to withhold your income tax refund, go after your wages, or seize your assets. This, of course, can also have a negative effect down the road in applying for mortgages, credit cards, or even rental applications. So if you ever find yourself in a position that you're struggling to pay back your loan, there's a few options that I want to explain in the next few slides. So there are several programs that the NCLSC offers that can extend your non-repayment period for an additional 6 months. Okay, so if you're the owner or joint owner of an eligible new business in Ontario, you can get an extra 6 months before you must start repaying your Ontario student loan and or the Ontario portion of your Canada-Ontario integrated student loan issued through OSAP. Federal government loans issued through OSAP are not covered by this program, so please keep that in mind. So who would be eligible for this? You must have left full-time post-secondary studies within the last 6 months, have full-time OSAP loans not currently in repayment status. You're the sole owner or joint owner of an eligible new business operating in Ontario. You are currently working in Ontario at least 30 hours per week as per your eligible new business. And your sole owner or joint ownership includes a director or officer role within the business of a controlling share. So this is more applicable if you are planning on opening your own business after school. They're understanding that you're probably going to have to take on some expenses to be able to do so. So that's why OSAP wants to be able to offer some flexibility to be able to ensure that you have that ability to be able to pay off that loan with a little bit more time. Now, as we look at continuing your education, everyone knows that at Mohawk, we're all about learning for life. I don't think I've stopped my studies since I've left Mohawk. It's just something that is ingrained in us and something that's very important. So just because you're graduating here from Mohawk, like I said, it doesn't mean you're finished your education for good. And most people, like I said, myself included, continue their studies at even at Mohawk, at university, sometimes even overseas. If you're planning on continuing your education, either here or somewhere else, you have more options than just OSAP. Each year, Mohawk awards millions of dollars in scholarships and bursaries to assist our students. And like we said earlier, the difference between a scholarship and a bursary. So we offer both. We offer a scholarship, which is awarded to students based on academic merit, athletics, volunteer, or other achievements, and then bursaries, which are awarded to students who demonstrate financial need and or meet other specific criteria. There are many available on the Mohawk website. When we're done here, when we go to the Q&A section, I'm going to take you through that. I have a link available so we can take a look at that and ensure that you can see what that website looks like, so you can be able to do that and know what you're looking at there. Now, if you're continuing as a part-time student through Mohawk Continuing Education or Mohawk CE, there are financial assistance programs options available, including OSAP, Mohawk Bursaries, and external continuing education awards. Students enrolled in a 20% to 59% course load may be eligible for part-time funding for educational costs through OSAP, and eligible students must apply through the regular application process that we've already discussed. Now, Mohawk College continuing education and part-time student bursaries are needs-based. So if you receive funding or awards from other sources, it may reduce or eliminate your eligibility to receive a bursary. Our website, again, offers a step-by-step process on applying for both. And that's something that we want to ensure that we'll go over and that you cover as well. Now, when you go into the workforce after you've graduated, often employers will have a professional development fund for their employees. If the field of education is relevant to the work that you are doing, many employers will pay for your courses and compensate your time to take them. This is a great question for you to ask in an interview when you go to leave the college and you're entering the workforce is, are you invested in my personal development? And what opportunities may there be within this organization for me to be able to grow as an individual and better reflect what this company is looking to achieve? So an example in terms of the bursaries, when I was at Mohawk, I had to fill out my financial needs assessment profile because I was going to work an on-campus job. And to be able to do so, you had to fill that out. And when I filled it out, just to be able to work the job within the athletics department, I received an email that I qualified for a bursary, and a bursary that I would have had no idea that I qualified for. But based on my applicant profile, I qualified for that bursary. And it was a bursary that would have went unclaimed had I not filled out that profile. So it's very important that whether you're continuing education or in college right now, fill out your financial needs assessment so that you can ensure that you take advantage of all these available to you. Now, the next topic we're going to cover is managing your debt. So, this is something that we've already covered here. Now, there's a couple different types of debt, and what are we going to cover in this section? So, the first thing I want to know, and we'll go to the chat here, and I'd like to see an answer from everybody here, is what does the word debt mean to you? Okay, before we dive into it and what my thoughts on debt are and what I have in here. When you hear the word debt, what comes to mind and what do you think of? And if everyone could just pop their answer in the chat there, and then we'll move on to the next slide. Rocky, Samuel, are you still with us? Any thoughts there in terms of what you think of when you hear debt? Great answer. Rocky, any thoughts? All right, we'll move on here. But Samuel, I think that's very, very well said. And I wish I could share that message here at Mercedes more often, because absolutely you should be careful what you wish for. And there's different ways to go about that. So, there are many types of debt. Debt can even help you succeed and get ahead. And as a student, banks and other financial institutions likely will give you a special offer or terms on various forms of debt. And as Samuel alluded to, kind of want to offer a word to the wise there in terms of what that may look like and what may be available to you. But there are a lot of positives out there as well. So personally, when I think of the word debt, I think of liability, payment, interest, loan, mortgage, bad, good, debt spiral, credit, lot that goes into that. So there's important to think of all these things, but like I said, we're going to look at debt in both in a positive and negative light here and ensure that we cover all of our bases. So there are many types of debt. We have our student loans, credit cards, overdraft protection, in a debit account, personal loans, mortgages for home buying, leases, home equity. A lot of these things have their positive and negatives, their pros and their cons. And it's important that any type of debt that we get into, we have an understanding of what's going on here. So we've got a video here that's kind of the difference between good debt and bad debt. Seeing as I have, borrowing can be a good financial strategy if it helps you acquire something like a house or an education in the sense of what we're talking here. that can add to your net worth or your value. It can also help you acquire things like a car that you can't easily save up for in a timely way, as I see that here all the time at work. As with any debt, you have to consider the interest costs and only borrow what you can afford. Now we have a video here. So I've just got Samuel and Rocky here with me. What I think we're going to do is I'll send a link to the video in the chat, and make sure that you check this video out and take your time. I think it's an important video to watch, but I'd like to be able to keep working through the slides here so we can keep a conversation going and stay with Samuel and Rocky here. Now, the questions you want to ask yourself before you're borrowing money, because it's very important that you consider all the different things that you need to look at and what may be important and what may not. So let's go through some of those questions that you should ask before borrowing money. The most important one, the absolute end all be all question that you should be looking at is, how much are you able to repay each month? So first, you need to be able to ensure that you can afford the loan and its monthly payment. It's important that you do not make financial commitments you cannot afford, and you need to do your research before applying. The biggest thing that I look at when I'm trying to approve someone for a loan here at Mercedes, or what I consider when I'm working with someone on their credit, is that you want to look at your debt servicing ratio. So this means that I have X amount of cash flow coming in. My biweekly paycheck is about $2,000, okay, after taxes and everything like that. So about $4,000 a month, and my monthly expenses are about $1,500. So as it stands right now, so if I'm looking at being able to add an extra commitment, how much am I really allowing myself to have some breathing room and to be able to take on that commitment? So it's something to consider and make sure that you're looking at when you're looking at taking on a new loan. Now, when you're looking at the loan, you need to not just look at the cost of the loan and what that monthly payment is going to look like in your budget, but you also need to look at the total amount you will need to repay. So it's very important to calculate the accumulating interest on top of the loan within your payment schedule. Interest rates vary depending on the type of loan. For example, if you take out a $10,000 loan, the first year, the interest at 5% compounded annually would be $500 for a total of $10,500. But if no payments are made, the following year, it becomes 5% interest on the $10,500, not the $10,000, for a total of an extra $1,025 in interest, or now a loan repayment of $11,025. It's very important in managing the compound interest and knowing what's coming month over month, and staying on top of these and looking at what I mentioned earlier, implicit finance charge and the total amount that you're going to need to repay. That isn't just the principal amount, but also considers the interest. Another thing you want to look at, is it a secured loan? So what does a secured loan mean? A secured loan means if you do not repay the loan, the creditor has legal claim of your assets. This could be a house or a car. This is based on the terms of your contract. Now, when you have a secured loan, you're usually going to get a lower interest rate because the bank or the lender has more skin in the game and is able to take on a little bit more risk because you've given them the guarantee that you'll be able to pass over the asset if they're not able to come to terms with the loan. Very important that you stay on top of these secured loans, as you don't want to lose your house or your car to the bank. So when you're taking on something simple and very common like a car payment, you want to ensure that it's almost 10 out of 10 times going to be a secured loan. If you're to miss those payments, they're going to repossess the car and that loan is still outstanding. So it's very important that you be able to manage that and understand whether the loan is secured or not. Next thing you want to consider is how long is it going to take you to be able to repay that loan? Okay, so always reference the term of the loan in the contract. A good rule of thumb, the longer the term, the more interest you'll have to pay. So if it's a 48-month loan compared to a 60-month loan, so 4 years compared to 5 years, very likely, it would be very rare to see that you're going to pay less interest over that 5 years. Okay, you're going to pay more interest the longer the term, but that's not necessarily a bad thing, because maybe you need to go that longer term and go with 60 months compared to 48 months, because you need to be able to have a monthly payment that fits more within your manageable monthly budget. And that's a very reasonable thing to do, but just make sure that when you're looking at this, you understand that the longer term you go, the more interest you're going to pay compared to principal, and need to consider that as well. Really helpful tool when you're looking at this is to use the payment function in Excel to understand how the term, interest rate, and number of payments can affect how much you pay each month. Now, missing a payment, it's the last thing we want to do, but life happens, and I'm cognizant of that, and I understand that life happens, and you may miss a payment. Now, if you miss a payment, a very common thing to ask yourself is, will the interest change? This depends entirely on the type of loan that you have, and interest rate may increase if you fail to pay by the due date. Perfect example of this is if your credit card rate is, say, 18.9%, okay? There's very likely a stipulation in your credit card contract that if you were to miss the monthly payment in a 12-month window, that they are going to increase the interest rate on that credit card, because they know they are now concerned about your ability to be able to repay that amount that you've borrowed. And then now they may want to make sure that they're getting more money because on interest, because their risk they've now deemed is higher. Okay, so very important that you look at these terms within a contract and always read the full contract you're signing. Once you sign, you are obligated to follow that contract, and the lender has a team of lawyers who have drafted their contract, and they're going to be all over making sure that they get their money back. So you'll want to make sure that you've done your due diligence and ensuring that you've read everything and understand everything fully. Now, common that you may see on a loan as well is wondering if your loan's insured. Loan insurance may be an option depending on your creditor. It's not always a good fit, but sometimes it's a very important thing to have. By paying into loan insurance, it's possible for the creditor to pay your monthly payment for you if you're unable to work or have become ill. This form of insurance is typically more expensive than a standalone life insurance or disability insurance policy. So shop around if this is something that you require for the loan, and get the lowest cost if you want to pursue this angle. So you may be able to get a lower interest rate on the loan if you buy this insurance, as it protects the lender in case something were to happen to you, you pass away, or you can't work and therefore can't repay the loan. Make sure to weigh all the costs. A very important example that I have on this from the car business is that we'll have sometimes people where they'll trade in a vehicle and they owe more money than their vehicle is worth. Okay, so they'll want to put that difference into their new loan. And what we'll offer is something called gap insurance, where what would happen if they were to write that vehicle off, the difference in what the vehicle is worth and what their loan is will be covered. So that's an example of a loan insurance that makes sense in some situations, but isn't always a good fit. And be careful when you're taking on a loan. A lot of lenders make their extra money through offering these insurance. Now, they're not always, that doesn't mean that they're necessarily bad programs. Sometimes they're very important and they do serve a good purpose, but it's based on your financial circumstance, and you need to weigh all options to ensure that it's the right fit for you. So hopefully following these tips, paying off your loan can be a little bit easier. Debt can feel like an overwhelming presence in your life. And I hope with some of these concepts that paying off your loan may not seem so intimidating. And like I said, it's a part of life, and there's people that come in to buy their G-Wagons that take it on as a debt. So it's very important that you consider all of this and understand that debt is a part of life, but hopefully these tips in repaying can make it feel not so overwhelming. And like I said, a big part of that will be considering creating a payment schedule for yourself. Just make it easier to visualize how long it will take you to fully repay your loan, and then make those adjustments accordingly. And consider using Excel to be able to do this. There's some really good functions to be able to do so. And if you're not familiar with those functions in Excel, There's some great, I'll send a link as well. There's some great YouTube videos out there that show you how to go through that. And it's a fantastic tool to be able to use. When you're looking at your loans, especially a credit card, we're going to go over this in a couple slides as well. You need to avoid as best as you can just paying the minimum payment each month. This will just compound the amount of interest building on the initial principal. If you're paying 20% interest on a credit card, this will greatly increase the cost of whatever you purchase. Now, I understand that there needs to be some enjoyment in life. And, sometimes we want to buy, go out for that dinner or buy that, buy that purse or buy those shoes. My sister and I we both love our shoes, and we're really big on always buying that new pair of shoes. And we always look to try and find when we can find them on sale. But if you find something on sale and you don't have the funds necessary for it, and you pay for it with your credit card, but then you're not making those payments, you're only making the minimum amount on your credit card, was the item really on sale anymore? Or will the amount of interest that you've paid on that item outweigh the benefits? So something to consider there as well. If you're purchasing something on your credit card, that's fine. It's a very, very fine way to be able to purchase something. But is my overall cost, if I consider interest, going to outweigh the actual value or the cost of that item? So we've talked about this already too, but if you're paid bi-weekly, you may decide to make payments every 2 weeks and have your payment schedule be bi-weekly as well. This can reduce the pressure off your paycheck at the end of each month. And also versus monthly, like I said, is a way to pay an extra month, quote unquote, because we have 26 bi-weekly compared to 12 monthly payments in a year, meaning you can pay off the loan quicker. So as an example, if you were supposed to pay $1,000 per month, but instead you pay $500 every 2 weeks, which is usually on the day you get paid, then you will pay $13,000 per year versus the $12,000 you would have paid per year if you paid the $1,000 a month. So this is an extra $1,000 a year that will help pay down the principal of the loan more quickly and ensure that you're not paying egregious interest rate charges. So we're going to go to, I'll pass back over to Craig. We're going to throw up another Zoom poll for everybody quickly. What's one thing that we took away about how to manage our debt today? And I hope you learned something new, but some of the questions answers that we have there are: when to borrow, difference between good debt and bad debt, knowing how much to borrow, and loan security. So if you had a takeaway from that, what would be your biggest takeaway today from managing your debt?
Okay. You see things, Kyle?
I do. Yeah, those are some good results. Yeah, it's interesting to see no one comes back as when to borrow, because I agree. You kind of know when you need to borrow money. It's pretty obvious in your own financial situation. But I'm glad to hear that we potentially learned something today about good and bad debt and knowing how much to borrow and loan security. Those are all very important parts of debt management, and I'm glad to hear that was a takeaway from today. So there are many special offers from banks while you're in school, specifically for students. And through continuing my education, I've been able to maintain some of these advantageous programs I've taken from the bank when I was a student at Mohawk. So it's important to be able to look into these. This includes the ability to be able to open bank accounts and debit and credit cards without monthly fees. So when we're looking at what type of card is best for you or monthly fees, it's recommended to find a credit card that fits your needs. It's important to shop around for different types of credit cards before selecting one. Now, as an example, for me, what the credit card that works for me may not be the credit card that works for those that we have in the session with us today. So the kind of card that I have is I have a card that has a lower rate. So I have a credit card that only carries a 12.9% interest rate because I work on 100% commission. So sometimes I carry a little bit of a balance on my credit card and use it like a line of credit because that's how I'm able to manage my monthly expenses. Now, on the flip side of this, I don't receive any of because I have the low rate, I don't have any of the bigger rewards that come along with a higher rate card. So some of the cards where you could pay 18, 19% interest, they'll give you points and travel miles and gift cards and all those types of things. And that's great if those types of cards fit your lifestyle and you have more of a stable and consistent income, if you know how much is coming in bi-weekly, it's fantastic to be able to take advantage of some of those credit card programs that they offer. But for me personally, it's more important to have a lower rate and forego some of those extra advantages that may be available to me. So as we look at our key takeaways from today, there are many different forms and features of debt. Please read the contract before borrowing money. It's very important to know exactly what it is that you're getting into and know what it is that you've signed up for. The other takeaway being debt can be good. There can be good forms of debt, like for school, buying a house, buying a car to get to work, etc. It's got the word debt has a stigma around it, and understandably so, because it can spiral quickly. But there also are good forms of debt, and when we can learn to manage those. And there also are, when it comes to banking and different things that are available to you, there are benefits to being a student, because students can get lower fees on bank accounts, credit cards, loans, etc. So for our third and final topic here, we want to get a little bit more into detail on using our credit card. So if you already have a credit card and you know a little bit about credit cards, or plan on opening or applying for a new one, or struggling to make payments, we hope that this section will benefit you. So here's what we're going to go over in this section. We're going to talk about the various terminology and how the interest charge works on a credit card. And then we want to talk about how that impacts your credit score, how to improve your credit score. And lastly, very important, we'll discuss how to get a free credit report annually. So when we're looking at some of our terminology, number one, annual fee. So annual fee, this is if your credit card charges an annual fee, you want to ask the lender if they'll waive it. It's very common that they might. They may be willing to do this to keep your business. I've been with RBC since I was born, and they don't charge me a monthly fee on my credit card simply because I asked. So it's something worth doing. There's also student cards available that may have no fees at all to begin with. Balance due. Your statement will tell you what you owe and when it's due. The amount due can include any unpaid balance you owe from a previous bill, as well as any new charges, interest, late fees, or annual fees. Credit limit. Fairly straightforward, but this is the amount you can borrow using your card. The lender can't change this limit without letting you know, whether it's up or down. They'll have to give you express written consent that they've changed that limit. Now, to lower the limit, they don't necessarily have to ask your permission. They just are telling you that they're lowering the limit. But to be able to increase the limit, you would have to have said, yes, I agree to a limit increase. They can't do that without you agreeing to that as well. Finance charges. If you don't pay your bill on time, these charges can include late fees plus interest. You'll likely pay a higher rate of interest on any cash you borrow using your card, and a lower rate on money you borrow for purchases. Your credit card companies treat these two different kinds of balances. At all costs, on this note, please do not use your credit card as a cash advance system like a debit card. It's one of the quickest ways that they'll charge you interest, and sometimes they'll even charge you interest by the day that's not paid back. So it's very important to understand what your finance charge is on a cash advance on your credit card, and actually, in my opinion, avoid using that at all costs if you can, and use it for purchases and other things like that. Grace period. This is the time that you have to be able to pay off the balance you owe each month before you have to pay interest. In most cases, the grace period starts on the billing date and ends a certain number of days after. Under Canadian rules, if you pay off your balance in full each month, your lender must give you a grace period of at least 21 days on all new purchases. If you don't, you'll pay interest on the full amount you owe back to the date of purchase, or when you borrowed on your credit card. So when we talked about, I know it's difficult to do so sometimes, but that's where the benefit is. It's very important to ensure that you pay that credit card in full as best as you can, as much as you can. Annual percentage rate, better known as an APR. This includes all loan service costs and interest. It may be higher than the interest rate that you see on the loan contract because it includes your charges and service costs and everything else that you would see. So this, when you're looking at this is the true cost that your credit card carries. Introductory rate. This is something that you'll want to look at when you first get a card. They may offer you a special that gives you a temporary lower APR, annual percentage rate. In most cases, I'd say 9 out of 10, this offer lasts for about 6 months. Then it goes up to the normal rate for your type of card. They must let you know in advance when the interest rates are going to increase, but it's something that you need to be mindful of and you need to watch. And after that introductory rate, determining whether that card is still the best fit for you based on what else it offers at that rate. And last but not least, the minimum monthly payment. So most cards, if not all cards, are going to ask, all they're going to ask for when you use money on their card is just a minimum monthly payment. You know, this is usually a very low amount, and it's just an amount to be able to ensure that you're able to keep using the card moving forward. If you were to focus on only the minimum monthly amount, you'll be in a tough position to be able to pay off that loan or pay off that credit card. To be able to kind of go into that in more detail, it can take several years to pay off your credit card by making just the minimum monthly payments. As an example, say you owe $4,000 on your credit cards. The interest rate is 20%, very common rate for a credit card. If your minimum monthly payment is $80 or 5% of that, by making just the minimum payments on your debt, it will take you over roughly 8 years to pay off your debt, and you will have paid over $7,700, over $7,000 in interest, or almost double the loan amount. This is extra money you will pay that doesn't go off towards paying off any of that extra actual debt you accumulated, and all just goes right into the lender's pocket. So even if you can just simply double the minimum monthly payment, that will help tremendously. Or better yet, I understand this isn't a perfect science. Don't use a credit card to buy the item you're looking at unless you can pay the credit card balance in full before the end of the grace period. I used to tell myself, if you can't buy something twice, then you can't buy it. But things have changed. The cost of living has gone up exponentially. And I don't think that's a fair way to be able to look at things anymore. But it's a good concept that I like to kind of keep still in the back of my head, that if I can't buy something twice, I probably can't buy it. Now we have another video here. It's just a quick video, about 2 minutes, for the minimum, going in more in depth about the minimum monthly payment, and it kind of explains how those credit cards work. Once again, I'll put this one in the chat so that we can be able to look at this after, and we can kind of stay on with what we're doing here with the slides. Now, a big buzzword around credit, and kind of something that we hear about a lot, is a credit score. So when you use credit, you'll be building your credit score. It's very important then to have some borrowing to ensure, if you want to borrow for a larger purchase, like a house or a car, that your credit rating will be established, not only established, but positive, okay? One tool to be able to build a good credit score is to get a credit card and then use that credit card to pay for 1 or 2 things a month that you always pay in full each month. An example of that would be your Netflix or your cell phone bill. After having paid off the credit card in full for 12 to 18 months, you will see a meaningful improvement in your credit score. Now, the day that I turned 18, I went to the bank and I got a credit card. Now, at that time, the balance or what I was able to borrow was maybe only a $500 card. But now, because I've built that relationship with the bank, 8 years later, I have access to a substantial amount of credit because I've always managed that card, and I now am in good standing with that bank and with my score, because when I was younger, I used that card for just simple purchases that help build my credit. Now, your credit score is used by lenders to determine what kind of borrower you are, okay? It can affect your eligibility for certain loans or credit cards, as well as the interest rate you get. So a credit score is a numerical summary of the information contained in your credit report at a particular point in time. If you have any credit accounts, such as credit cards, mortgage or loans, you will have a credit report. In Canada, your credit score ranges from 300 to 900, with 900 being a perfect score. And let me tell you, working with people borrowing money here for Mercedes and people that have owned businesses and doctors and lawyers and everything like that, I've never seen a 900. So don't let that number get in your head. It's almost practically unachievable. So if you have a score between 780 and 900, that's excellent. That's perfect credit in the eyes of a lender like Mercedes-Benz. If your score is between 700 and 780, that's considered a strong score, and you shouldn't have too much trouble getting approved with a great rate. You know, we use an example here that you may need a score of about 750 to be able to lease a car. We at Mercedes, as an example, we look at kind of 650 and above. Okay, 650 is kind of that threshold that we look at to be able to see where they're at. But then we look at the score, 650, okay, good, solid score. But then we pair that with what I mentioned earlier, which is your debt servicing ratio. So your ability to be able to pay off those loans and your ability to be able to service that monthly payment based on what your monthly income is and what your current committed monthly expenses are. So meeting future goals depends on your credit score. The two most important things that go into your credit score are payment history. So do you pay all your bills on time? That's your cell phone, your Netflix, your hydro, your water, etc. The other aspect is your credit utilization. So the amount of debt outstanding to total credit available. As a rule of thumb, not a perfect science, but as a rule of thumb, try not to have more than 30% or so of your credit limit outstanding at any one time. So for example, if you have $1,000 limit on a credit card, then try not to have more than $300 outstanding at any one time. Again, not a perfect science, but just a good rule of thumb when you're looking at building your score. For the 10% piece of the pie for new credit inquiries, there's a differentiation between hard and soft credit checks, okay? A hard check is when you authorize a lender, for example, us here at a car dealership or a mortgage advisor, to check your credit for a credit card application, rent a property, new cell phone, etc. And then they say on your credit report for 2 to 3 years once you've made that check. A soft check is when you get your free annual report, or if a company inquires to see if you qualify for credit, or an employer does a background check on you, as an example. When we look at a credit score, correcting past issues will take time. Credit takes a very, very long time to build, and unfortunately, it takes only overnight to tarnish it. So it's very important that if you're working to rebuild your credit, as so many Canadians are, that you be patient and you build good habits, okay? People looking to extend credit to you will want to see 12 to 24 months of quote unquote good behaviors. Paying on time 1 month isn't going to help you. It needs to be consistent. You can also, I know I can with RBC, you're typically able to access your credit score on your banking app for free. Okay, so it might be something after this, take a look at and see if you have access to that on your online banking. So when we're looking at improving your credit score, how can we build on this? How can we make sure that we improve our credit score? To go over some of these again, we mentioned some of these already, but you want to pay your bills on time. Payment history is the single most important factor to improving your credit score. In addition to mortgages, credit cards, and other loan and credit products, your payment history may also include certain accounts like phone bills, utility bills, and even rent. Late or missed payments can lower your score. Phone bills from when people were younger, I would say, is the #1 reason in which people have an affected score, that they were unaware that they had a weak score or bad credit, because they don't even think about it. But when they were 18, 19, 20 years old, they were slow on paying their cell phone bill, or would pay 3 months at a time kind of thing late. So it's important to keep on top of those and manage those accordingly. #2 is to keep your balances low. So your credit utilization ratio is the amount of available credit that you are using at a given time. So for example, if you have a credit balance of $4,500 and the total credit limit is $10,000 from all of your credit cards, the credit utilization ratio is 45%, which is higher than that recommended 30 to 35% that we discussed. A low credit utilization ratio helps improve your credit score. In contrast, a high credit utilization ratio may lower your score. Number 3 is have a longer credit history. So the longer amount of time that you've had credit products open can affect your credit score. Generally, a longer credit history can improve your credit score. Very frequently, I see here at Mercedes or car loans in general, people don't have bad credit, they just don't have any credit. They've always paid for things in cash. They've always used their debit card or things like that. So it's nice to be able to have that credit card, build a little bit of credit so that you can have that when you go to get things like a car loan or a mortgage. But it's important to make sure you manage it accordingly. Another way is avoid unnecessary credit applications. Your credit score can decrease slightly each time you apply for credit, such as a new credit card or auto loan. This is also called a hard inquiry, like we talked about, between a hard and soft inquiry. The decrease is usually temporary and it's not substantial, but some lenders may consider you having too many credit applications within a short period of time as a warning flag. A perfect example of these is when you go to the Leafs game or you go to the Ticats game and they say, hey, would you like a free toque? Would you like a free shirt? Would you like a free whatever it is? No problem. Just sign up for this Toronto Maple Leafs MasterCard, this Hamilton Tiger Cats MasterCard, this Bulldogs Visa, whatever it is. That is a hard hit on your credit. Okay. And something to keep in mind when they're doing those, that they're pushing those cards, and that's what they're trying to do. But if it makes sense for you, great. If it's worth the free shirt or anything like that, don't let that stop you. But just make sure you're cognizant of those kind of things. And last but not least, have a mix of credit types. So your credit score may improve if you have different types of credit products, such as a credit card, mortgage, and a line of credit. However, only apply for credit if and when you need it. Don't get a different type of credit just so you can diversify your credit available to you. Try to make sure you're doing so just when you can. Okay. Now, your credit report. Your credit score is based on what is in your credit report. Your credit report is a record of how you manage your credit obligations. It contains information on loans for the last 6 years, their payment regularity, how much you owe per account, what your limits are per account, list of authorized lenders who have accessed your file. There are 2 credit reporting agencies in Canada. You can get, this is very important, and this is one of the biggest takeaways from today. You can get free copies of your report from TransUnion and from Equifax once a year. They're legally obligated to provide this to you. It's your responsibility to correct any errors on your credit report. So we encourage you, after you've left us today, to request that free report from one of the agencies annually. A perfect example I have of this is I have a customer who came in. They believe they had perfect credit. They would have never applied for a loan otherwise. They could have bought the car cash, but the interest rate was so low, they decided to apply for a loan. So we applied for the loan and it comes back rejected. And they were confused. They couldn't understand why. They had 4 or 5 unpaid $500 credit cards out in their name that were Walmart, Home Depot, Canadian Tire, those types of credit cards that someone had stolen their identity and opened. And they would have had no idea unless they applied for this loan, and these people would have continued to have ran rampant with their credit on the stolen identity. So it's very important that because it's your responsibility, you need to stay on top of your credit, that you're looking into this, and that you get that report once a year so you can avoid something like that happening. Now, something I want to preach on as a stay away from, if you will, really, is the buy now and pay later programs. Now, they've been around for decades. It started as layaway plans for, buying a couch and paying for it in a year and everything like that. The new approach to buy now and pay later could be a very scary development for your personal finances. You're able to buy a lot of things now, take them home, and pay in 4 easy installments, as an example. The challenge is making sure you truly can pay for all the things you put on a buy now, pay later, as there are some new approaches. You can buy now and pay later on small purchases. I've seen it, a $200 pair of sunglasses where you can buy now and pay later. These are being offered as studies have shown that you will buy more than you would have otherwise. So they're developed to help retailers increase sales. There may be negative repercussions down the road if you can't pay later. These might include fees, penalties, or impacts to your credit score. in my opinion, personal opinion, if this is what works for you, then that's fine. But avoid all buy now, pay later programs that you can. They are nothing but a headache and will cause you nothing but troubles down the road. So our key takeaways from this section is I want to understand how a credit card works, especially the interest charges and the pitfalls of only paying the monthly minimum balance. What are the key factors in your credit score? Payment history, about 35%, and credit utilization. You want to keep that about 30%. And most importantly today, probably the most important thing I think we've covered all day is you can get a free annual credit report from Equifax or TransUnion, and that's very important in maintaining your score and staying on top of that. So let's go over kind of in summary what we reviewed today. So we talked about paying for school. There's lots of costs for school, but it is a great investment that pays for your future self, and there will always be a positive return on investment for your investment in your post-secondary education. There are lots of ways to pay for school, but make sure you look into as many of them as possible and make a plan. Understand your costs and inflows and see if you can make any adjustments to be able to afford school a little bit differently. We went over managing your debt. There are many different forms and features of debt. Make sure you read the contract before borrowing money. Understand what you're borrowing and what you're getting after. Number two, debt can be good, and there's many forms of it, like paying for school, buying a house, buying a car, etc. And there are benefits in being a student. Students can get lower fees on bank accounts, credit cards, loans, etc. In our last section, using credit cards, we want to understand how credit cards work, especially interest charges and the pitfalls of only paying the minimum monthly balance. And then what are the key factors for your credit score? Like we said, payment history and credit utilization, and making sure that you get that free credit report. So as our next steps as we leave here today, I kind of want these to be the big four takeaways. So I want to make sure that you're looking into scholarships and bursaries, requesting a free credit report, make a plan to pay off your credit card or the different debts that you have in your life, and check out the different program resources that we have available to you, especially at Mohawk with Mo Money and everything that we have available to use. I hope we've accomplished our learning objectives today, and having a better understanding of all these, understanding why it's important to pay off your credit cards and how to improve your credit score and manage your debt so that you can reduce your financial stress. Thank you very, very much for those who attended today. Craig just put through the post survey. We sent the pre-survey earlier. Please take the time to finish both, complete both. There will be a short post survey to go as well. If you fill out both, like we said, you're going to be entered in the draw for the one of two $100 Tim Hortons gift cards. And like we said, don't worry, we're not going to use your email address for anything else other than the draw. And please continue to ensure you keep attending the workshops here. We'd love to have you and be able to go over everything that we've done. So thank you everybody for your time today. Do we have any questions that we have from the group here? I know we've got Samuel and Rocky with us. Any questions that you two had?
Thank you very much, Kyle, for delivering that webinar. Covered a lot of material, so really appreciate that. And as Kyle mentioned, if you have questions, feel free either in the Q&A part of Zoom or in the chat, and then between the folks on the line here, Kyle and others, we'll do our best to get you an answer.
Thanks, Rocky. Appreciate that. I know you're going to go 5 for 5, so we love to see you here. And then if there ends up being, if you can't think of a question off the top of your head right now, feel free to reach out and we'll make sure that we've got you looked after. I'm happy to answer any follow-up questions as well. All right, doesn't look like we have any comments, questions, queries, or concerns. So I'll take that as a positive. Thanks for coming. Thanks for coming, Rocky, Samuel, Juan, if you're here as well. And we hope to see you guys again.
Yeah, great job, Kyle. Really good job. That's awesome.
Thank you.
Yeah, thank you, Cal. Anyone else have
you.
anything else to add before we sign off?
Good.
Okay.
Have a great day, everyone.
Take care, everyone.
Bye.
Thanks, everyone.
Bye.
Bye now.